This is Short Hammer. It is the 2nd of February, 2020, and this is Trading Zones. Now, Amazon blew earnings out of the proverbial water, and anyone that was long Amazon into earnings, congratulations. Almost no matter what strike you purchased, you made money. Wonderful gap up. Ran more than 200 points. Look at that run. It was amazing. Now, what happened after? We had a pullback that we blew back through the all-time highs, which was around this 2000 and what is it? It looks like about the 2031 to 2035 area. Blew through that. Wonderfully blew through that. And we tagged about 20. It says 2051. I thought it was higher than that. I got to double check this. We tagged 2055, but hold on a second. This can't be right. Let me go to the 4 hour. Because we went BANANAS. So we tagged 2134. Okay, I knew it. And then in the pullbacks, we have a level at 2092, 2075, and this 2052 area, which is the all-time high before we broke out. And we pulled back on Friday, and we ended up holding the 2000 level, but we're sitting right around there right now. And we'll see what we do next week. So for me, what I'm watching on Amazon is, do we hold this 2000 level? And if we do, then I'm gonna be long Amazon back up into those 2030s. So we'll see how this works out. If we crack below, I know we do have a little bit of demand in the 1995 area, I think. But I'm just gonna watch for any pierces and back test of the 2000 level. And if it looks weak, and depending how the overall market looks, I'll fade it intraday real quick. But if we remain bullish above this level, and I have to go down to the 5-minute chart to be honest. Let's see how the 30-minute looks. Okay, so we're flattening out here. And you see that's that low tap, the initial open, that low tap in that first 30 minutes. Went back to that, and we're kind of riding that. So we want to see if at the open on Monday, if we buy up off of this level with strength, or if we reject this level with strength. This is going to be one heck of a gap. And if the market nosedives, then we should definitely get an opportunity to play that. But I wouldn't play the complete gap close. I would just play level to level. So we have a level down here at around the 1957 area. And this is just on the 30-minute. I have to look on the daily though, because there's so many other little micro levels. If you break this down to the 15-minute, you're seeing the waves here, the back tests, and the failure to hold. So Amazon next week, watch this 2001 area, see if we hold. If we hold, then keep an eye out for the 2030 area. If we don't hold, I'll be watching to see what we do down to the 1950s. So we'll see. I'm just going to play these levels and play these zones, see where Amazon goes. A lot of people are probably going to be dip buying Amazon in expectation of people buying this back up just based on that beat. Don't be caught jumping in Amazon immediately as soon as it opens. Wait for it to tell you. Wait for the market, the overall market to tell you if it's going to buy back up. Watch the futures. Watch how the futures are moving pre-market. Listen to what the news is, what's coming out, what people are talking about. Watch the financials. Watch the bonds. Keep an eye out. Amazon's news is out. That's now that's now a I won't call it a tailwind, but that's gone. That catalyst is gone now. So now if you're a buyer or seller in Amazon, what is the future news that you are using to if you're going into fundamentals? What's the future news, the future reasons why you're getting into Amazon now? The holiday numbers are out. The cloud numbers are out. All that's out. So what are you betting on? What's your next catalyst to take Amazon back up to these levels? And if the market's moving and the market's bullish, then the bulls will probably jump in here and try to ride this train back up. But if the market is bearish, the bears are just going to see this huge gap up and say, hey, how far down do I have room to fade this bad boy before the bulls feel that there's value to the upside? They just want to jump in and hold that level, like hold that line. That's my view on Amazon. So let's move it on to the next ticker. And the next ticker in the trading zone sweepstakes is Netflix. See what we've got on Netflix. Now, Netflix, we did not quite close the gap based on the daily chart. It's a little bit higher, but you can say it's close enough. And we pull back to the 343 level. So what am I looking for on Monday? Do we hold this 343? Do the buyers step in and push us up? Do we go below and fade down to the 336, zone to zone? So I'll be watching Netflix. The Netflix wall of I don't know if it's wall of shame. It depends on, I guess, if you're a bull or a bear on this, or your perspective on this. But if we get up into the 380s, watch this 384, this 385-ish area. That has been a brick wall for well over a year. And if we get up there, it may be similar to how Tesla was in those 380s, where it could hit it, and then there's a strong enough catalyst to give us a blow through. The problem with Netflix is that they have substantial competition with so many different streaming services coming out and so many people that want to bring back in their originally owned content that they had leased out to Netflix, a la Disney, and launch their own and push their own streaming service. So their spend on content is going to be massive, and their battle for eyeballs is going to be massive. So they have massive headwinds. So we'll see how they innovate as far as shows and original content. But Netflix does have its challenges, but it's still the leader in the clubhouse. So we want to watch and see how this plays out. But I'm watching these levels. There's 343. And if we stay above that, I'm long. If we get below this and the market is bearish, I will fade it down to the 335-ish, 336-ish level and see what happens there. Zone to zone. We still have the uptrend intact on the daily chart. If we break this down, check out the 4 hour, see what we've got going on there. On the 4 hour, we see a little bit of structure here. Have few alerts put in here. And that we are holding, even though we pierced through, we did buy back above this 343. We'll see what we do. We'll see if we're more bullish and we kind of, with the market open, if we sort of matriculate to the upside up near those 348s, 350s, we could buy back up to that area. That'd be beautiful. And if we fade below the 339, 338, then we have the 335, 336-ish area here. And if we fade below this, like for me, so I'd be in short below this, fade this to the next level, I'm out. Few contracts or all contracts, depending how the market looks and how we hit that area. If we're if it's a strong dip into that area, or if it's sort of a slow grind down. And if we hold this line and it's a buy back up, then I'm long. And I'll ride this back into these upper wicks here around the 348, 349s and watch for bullish continuation and overall market strength to take this to the next level. And I'll be exiting contracts as we go up. But if you draw the uptrend, which is right here, it's technically intact all the way down to around the 323-ish area. So we can pull all the way back to 330s and we're still okay. And even this lower dip here around the right here, this 323-ish area, That wouldn't be a bad test. I will extend this line. I'll get to that in the future. But Netflix is still bullish, and we'll see what the market looks like. Because remember, a lot of these tickers, the overall market strength and weakness will determine the movement when they have no catalyst of their own. So let's go on to NVIDIA. NVIDIA on the 4-hour, look at that. Looks like we might be headed down to test this trend line. We'll see. But we do have some buying that went on in this 230 area. We are below the 237. So for me, this is the point of no entry. I want to see if we push back up to the 238. I might get short against that 238, depending. If the market has direction on Monday, the entire impeachment thing, I think, will be behind us. So we'll see how the market sees that. And if the market's overall bullish, if we sort of go back above this level, then I'll be long against this level and try to ride it back up into the next zone. If we remain bearish below and I see more bearish formations than where market is weak on Monday, I'll be fading it down into this 230 level. And I kind of want to see how we interact with this trend line. Do we sort of gap down into it, or do we sort of grind down into it? And then what do the bulls do when we approach this area? The trend line is kind of in a mid area. And for me, it would be better if we waited till around the 11th of February to get there, because then it would sort of interact and be right, like lined up with my zone here in the 230 area. So I'm watching NVIDIA, and let's take a peek at the daily chart. Yep, looks like we maybe. So I'll be keeping an eye on this, seeing if we see the buyers and the demand step in here. And if we go back up into this level here, which is some light supply. And if we open above this level, then I'll be long against this this 238. And move on. Let's check out Facebook. Facebook is on the daily below our 203.87. If we end up above that, then I'll be long off this level into the 208s. If we remain weak, I'll keep an eye on the 198 for a potential demand level where the buyers may step in. If it's too weak, then I'll expect us to run through that level and potentially go down into the 190.82 area. So I'm going to be playing off of this 203.87, 204-ish area, potentially 205-ish area if you look at that, and see if we get weakness and fade that to the lower line here around the 198s, 199s. And if we're bullish and we're above this level and I see the market is strong and Facebook is headed in the other direction, then I'll take this long into the 208.75. If we gap down through zones, I'll just play the next zone. I'm not going to jump in the middle of a zone in expectation of continuation. I'll rather wait for a back test of a supply area or a test of a demand area or back test of a demand area, depending on the structure, and look for bullish confirmation to the upside or bearish confirmation to the downside for me to take it from that zone to the next zone. That's my view on Facebook. Coming into a day, I'm neither bullish or bearish. I'm just neutral. And I take a look at the bonds. I take a look at the overall market strength, looking at the futures. I look at all those things pre-market. What's strong? What's weak? Where's the focus? What's the sentiment? I try to gauge that pre-market and then look at the levels that may coincide with what the overall market is telling you. If the individual ticker does not have strength of its own or catalyst of its own, then I use the overall market or sector strength or sector weakness to say, hey, this is a level you should get in, and maybe you get in a little bit more contracts or more shares because you feel strongly about that position. And if you've seen the market feels a little bit lukewarmy, a little wish-washy, kind of choppy, not quite sure, go lighter on your contracts or lighter on your shares to protect the downside. If you liked these or this video and this content, please don't hesitate to tap that like button. And if you'd like to receive similar content, please subscribe to our Power of Pivots channel, where you can look forward to receiving content not just from me, but content from Elisa as she shows you how she utilizes that power of pivot script to find laser targeted entry and exit points on not just intraday trades, but also her swing trades and setups. Thank you for your time.